Welcome to another Wall Street Informer production on WSI TV.
Welcome back for another Friday edition of WSI TV, where Sean and I would like to welcome all our new subscribers. Now, you guys wouldn't be here without all our original subscribers, so we'd also like to thank you guys for being here with us from the beginning. We couldn't be any happier in helping you achieve your financial goals. Now, today we're going to move forward into showing you why you should dump your fund and jump in on these accounts that are creating the new rich.
Yeah, absolutely. When we're really talking about mutual funds here and dumping yours, because mutual funds are dragging you down. Now we're going to give you access to a new account, a new mutual fund that you're going to build yourself. It's your own mutual fund, and we're going to tell you why it's going to be so much better than what you're currently dealing with the mutual fund manager you have now. The first reason is because your mutual fund manager probably isn't even beating the market. Something like 70% of them don't. So if you just took all your money and threw it into a market index fund, you'd likely be beating what your fund manager is doing for your money right now. But another reason is you don't have direct access to your money. It's all in the hands of that fund manager, so you can't get in and out when you need to. If you see a market correction coming, a crash coming, you can't just take your money out as soon as you want. It's up to your fund manager, who really likes to keep your money in, tell you he's investing for the long term, and keep getting paid by you to do so while he's losing you money all along the way. And of course, the third reason is you're paying significant fees to your fund manager to manage your money. And just like we just highlighted, they're probably not even beating the market. So a lot of reasons why mutual funds aren't one of our favorite things here at WSI TV. But of course, we are going to give you a much, much better alternative than mutual funds. It's actually building your own, like I said, and something that's going to give you a ton of benefits, Jordan.
Exactly. And once you dump your mutual fund, you're going to move over to exchange-traded funds, right, or ETFs, as you might know them. They're just better all around. I mean, I could talk for days about ETFs, but the main point is it puts you in control. They're cheap, and you can sell or buy them whenever you'd like, you know, right, and you can build a strong foundation of these ETFs. You can diversify as much as you want to, and it's as simple as trading stocks, really.
Yeah, absolutely. I mean, what an ETF does is puts you in control of maybe a basket of stocks, like the financial sector, for instance, with something like XLF, which is a good ETF to bring up. It can control something like gold, Forex, commodities. It's something your fund manager would do, is diversify your portfolio, get into several different things at once. You can do this on your own with ETFs for much, much cheaper. ETFs do carry some small expense rates, but they pales in comparison to what your fund manager would be charging. And then they just trade like stocks. You can trade them as easy as you would trade Apple stock. So while you have a tiny commission fee to pay to your broker, you're in control of your money. It's all in your hands, and it's much, much cheaper than going through a mutual fund manager.
Yeah, I think the most important thing you touched on earlier was, you know, during a crash, you can get out. You know, you can see, even if you're a little late on getting out and you lose some of your profit, you're not going to sink all the way down as if you would in your mutual fund. Now, speaking of this, we've been talking about fear lately, fear in the market, and where all the money goes when people are scared about an upcoming market crash or correction. People turn to gold. Now, a great ETF for gold is GLD. I mean, there's thousands of them, obviously, but GLD is just, for us, I know it's the standard we look at when we want to see how gold is doing, you know. So GLD is a great ETF to look at. Like Sean said, XLF, the financial sector, is a great look at to see where the market's going, you know, and where you should be going when the market goes down.
Yeah, that's right.
Right. So I mean, you know, as the new subscribers, this is going to be a lot of information to take in. You other original guys know that you can watch this over and over again. You can comment, ask us any questions, like you guys have been doing recently, you know, but we're here for you every step of the way, so you can dump your fund and, you know, jump into these new accounts that are creating the new rich. Now, that's all we got for today from Sean and myself. See you next time.
Thanks for watching another Wall Street Informer production on WSI TV. Be sure to visit wallstreetinformer.com, where you can become a member for free and gain instant access to the secrets of market millionaires via the Wall Street Informer Vault. So go ahead and claim this gift for free now at wallstreetinformer.com.